a lot of times when we take a step back and we look at multiple asset classes on one chart, we can notice some really interesting things. And what I'm noticing here, I think, is something that everyone should be aware of as we are kicking off 2025 here. So let's look at the top part of the chart first. I'm going to just minimize the bottom because it's not relevant just yet. What you've got here is two things. You've got two lines. The blue line is the price of gold. I'm using the GLD ETF here as a proxy. And then the red line is the VIX. And historically speaking, what you'll see is that with some exceptions in very, very extreme situations, but what you'll tend to see is that the price of gold is high when the VIX is high, as sometimes, again, not always, but sometimes there's or more often than not, is probably a better way of putting it, there is a bid in the price of gold when there's some volatility. Although that's not really what keeps the gold price elevated, but there's an immediate reaction to that plenty of time. And right now, what's interesting is if you look at the blue line, obviously it's been hockey sticking up and to the right over the past year and a half, but VIX remains very low. So the question is, why is that happening? And we think it's, again, comes back to the debt issue, the higher inflation for longer thing we've been talking about. So, at some point, creditors are going to be less willing to buy U.S. debt. In this case, and this is a global phenomenon, but in this case, we're looking at stuff that's priced in dollars. So there's a disconnect, and it doesn't bode very well for risk assets. It doesn't really mean risk assets have to collapse, but we could start to see further outperformance or continued outperformance of things like gold and other things that are that tend to do better in higher inflation environments. And then at the bottom is the dollar index, and it's a very similar situation here. Typically, actually, or an inverse relation. So typically, when the dollar index is higher, like you can see, for example, in 2022, what we'll tend to see is the price of gold will tend to have come down, right? So you see the blue line up on top went down as the dollar index went up. But now the dollar index has been skyrocketing over the past quarter plus, and the price of gold has done the same thing. So again, the price of gold seems to be not caring about any of this stuff. It's just going higher. And again, that speaks for some underlying dynamics that we want to respect. So from an asset allocation perspective, for me personally, I still like the price of gold. Hope it helps. See you again soon.